the one disadvantage of whole life from term is higher.
Parents, you never gave them any mind. You never took them out. You never honored them. But you want to show off on their death, on their funeral. Like, get a life. Are we advertising mom?
Yeah, we get advertised. My mother is a great one. I love my mama.
What is that comparison? Oh, in the US we do it like this. Oh, this is America, baby.
But yo, it's your boy LJ Chaplin with Lady Season, bringing to you Chilling with the Chaplins, where we deep dive, giving you practical concepts in ministry, business, relationship, and personal development, so we can take control of our life. Let's go and let's get it started. Welcome to Chilling with the Chaplain. It's your boy LJ with the one and only, my lovely wife, Lady Season, in the building. Yes, you know we're about that vibe each and every week. You know what I'm saying, So today we want to talk about a bonus series, a bonus topic that we want to talk about. We want to continue on this series, Think Differently. So we want to come to you with a bonus episode of Think Differently, and we want to talk about life insurance.
Life insurance.
Yeah,
Yes.
and we want to talk about why you should have life insurance. What's the benefits of life insurance? And we're hoping that this podcast will bring some awareness, will allow you to begin to start talking about life insurance, talking about death, because we got to understand something. Death will happen. It doesn't matter if you talk about it or you don't talk about it. It will happen. And so why not be prepared when death comes?
Especially, we're living in the end times. There's a lot of unplanned. Death is never planned, but with all the diseases going around, people die. And if you're not ready and prepared, then you will end up frustrated. So
now, not you frustrated, your family being frustrated.
Exactly. You're going to leave your loved ones frustrated and even resentful of you. Then why didn't you even, think about the end of life?
The end of
life is so important. So this session is more of an awareness to especially the Black and brown communities, because they feel like, oh, we'll just put a GoFundMe.
A GoFundMe.
No.
I'm tired of this.
That's wrong, and that's being selfish.
Yeah, I'm tired of saying the GoFundMe.
Let's put a GoFundMe. For example, if somebody committed suicide and you guys were not ready, because some insurances don't pay out for suicide.
Yes.
Let's put a GoFundMe for things that are really like for surgeries that your insurance cannot cover certain expenses. I'm not against GoFundMes. They really do help. But let's not put GoFundMes for funerals.
Yes.
Something that we can take care of.
Prepare.
Something that we can prepare for. So, this is all about that.
Because it's definitely taboo in the Black and brown communities, and we need to begin to change our mindset and begin to talk about these things, because it's okay.
Death will come.
Yeah, all you had to do is, when you prepare for life insurance, all you had to do is prepare once, get an automatic. What is the automatic where they take it out your bank account, and guess what? You never have to worry about it again.
Yes.
So that's why we want to talk about life insurance. We want to show you the benefits and why life insurance, so that you would understand why life insurance is important.
Before we go into that, I just want to ask you, are we going to talk about the difference? You're going to mention the difference between the short term
Yes, we can.
Insurance?
Yes,
Oh, okay.
because it's three most important life insurance that you will see. It could be more. It's definitely more. But these is three that's most main one, most popular, and that's term life.
Yeah.
That's whole life, and that's universal life.
Okay, so break it down. I know term life. Let me break down term life. That's term. It's typically the cheapest.
Yes, typically the cheapest
of coverage. But the thing with term life, it expires.
Yeah, just like the name said. Yeah.
Yeah.
Term.
So you could go for a 10, 20, 30 year.
30-year term.
Term. Is there more than 30?
It all depends. You can get
age.
you can get a rider where you get change and convert the term to a whole life.
Oh, okay.
Yeah.
So and then the downfall of term life is that it cannot be used as a wealth building
strategy. Yes.
Unfortunately, that's the sad part, because it's when somebody dies, right? It's not like it does not get converted into cash.
Cash value. Yes. That's the one benefit of term. But if you
it's no disadvantage.
I mean disadvantage. Yes, that's the one disadvantage of term, because you can't use it as a strategy to leverage. To leverage for maybe an investment or whatever.
Yeah.
So that's
Talk universal.
No, and whole life. One of this now.
Talk universal. I'll talk whole life.
Universal.
Yeah.
Universal is like a stock option. It's like they invest in into the stock market. So
how does it work?
So what they take they take the money and they invest it into the stock market. So it gives you an opportunity to gain more. But you also could lose more.
Oh.
So it's based on the market.
So
market
how
rate.
Does it work in terms of somebody dying? So it is a strategy to build wealth as well.
Yes, it's a strategy to build wealth, because it determines on how the market is doing. So it can go up or it can go down.
So when you die, you can take out the money and bury a person?
Yes. Yeah. It's still life insurance.
Oh.
But the thing is, it gives you an opportunity to increase your death benefit.
Let me add a bit on that. Universal life. It covers the policy holder for the entire life. Which is the part that I like. It provides death benefit with savings component,
yes, savings component,
or cash value that builds over time on a tax deferred basis. Policy holders are also subject to penalties if they terminate early. So that's the downfall.
Yes, that's the downfall, because it's like an investment strategy. It's just like an IRA. If you terminate early, you can be paid a penalty. Basically, you're gonna be paid the taxes. So that's why you gotta keep it, because it's like a IRA, because they invested into the stock market.
Got you.
And you could be paid, because you gotta remember the government want their taxes. So if you take it early, you're gonna lose, because the government gonna take it. But if you keep it inside, then you won't lose the money.
Right. And then
but you can always borrow money.
Oh.
Yeah, that's the difference between.
There's no penalty.
There's no penalty. With life insurance, whole life or universal, you can always borrow the cash value. You can always borrow the cash value. But the universal is a little more.
You mean term?
No, whole life and universal. When you're borrowing money with universal, you got to really ask your person who
your broker.
Your broker who done your insurance, because there's a little more that you have to do to get the borrow money for universal.
All right, so then whole life. Premiums are locked for life. That's the benefit. I love that.
Yeah.
If you start at $50, it'll be $50 for your whole life.
For your whole life.
Because I know we have term and it's going up every year, every year. But the best part is that as much as the premiums are going up, even the cash value is going up.
It's going up, yeah.
So that's the good part. And you have an option of stopping it, if you don't want them to raise up the cash value over time. And they do that because of also inflation. Because if you put in 10,000 10 years ago, in 2022, 10,000 is absolutely nothing.
Yes.
Nothing. You only buy a coffin with that.
Yes.
That's it. Caskets. That's it. 10,000 gone. So another benefit. Another element for whole life is that you can provide cash value in additional to the death benefit. So I like that. So you get the cash value in addition to the death benefit, and the policy never expires as long as you keep paying your premiums.
It never expires. And the one disadvantage of whole life from term is higher.
That's what I was going to say. The premiums are pretty high.
It's pretty high.
Yeah.
So, but here's the thing though. The earlier you can start, the better it is for you. Even with whole life. If you start at 10, if your parents do it when you're 10 years old, if you got children and you get your policy at 10 years old,
And then you just lock
it. They lock it, and you probably paying like $10 a month for like $100,000 policy.
Oh, okay.
Yeah, it's very cheap for a team because the expectancy of living is to 70 years old, 70, 80 years old, especially nowadays.
Well, in the United States. Some countries it's lower.
It's low, but the expectancy to live in the United States is like between 70 and 80, especially now with where people are more health conscious. So if you get it, you put your children on a life policy at 10, it can be $10, and they have it for the rest of their life. That's why I thank God for my mother, because my mother, that's one thing she did do when we was young, even though we didn't do it at 10. But she started when we was 19.
You're getting 100,000.
No, she ain't getting 100,000. But when she first did it, we did 19,000. So I did 19,000, and
It's not much, no.
It's not much, and so
but it does get you under the ground.
But that's what she could afford. But I was paying $14. You know, and then I'm telling you, my mother is so with life insurance and everything. When I got rid of that life insurance, she went and got me another life insurance.
But why get rid of it? Just because you don't want to pay $14? It's people
I
like you.
I wish I would have kept it, because that would have been more money.
It's people like you that cause us headaches when they die. You know, because they don't see the future.
I didn't see the value at that time, but I wish I would have kept it, so that I still would have been paying $14 than what I'm paying today. Cause I'm paying it basically double, because I had to renew it. I'm paying double, and I would have had more cash value.
So we're stopping people like Leonard. You know.
My sister still got it, but the beautiful thing, this is what I love about my mother. My mother she went over beyond when she prepared for her death. She not only got life insurance on herself and her husband and got it for us, she also went to the burial and got her plots
We're talking
done.
about smart people here.
Yeah.
One of the smartest ladies I
know.
Because she doesn't want to put burden on her children.
On her children.
And that's a very good
Yeah,
thing.
so
let's jump on to why it's important to have life insurance.
Life insurance.
Be it terminal, whole, or universal.
Yes. And like I said, you start early. I'll revise
The
whole.
earlier the better.
The earlier the better. So that you can have, so that you could get over 100,000. And you want to make sure you pay more into the premium, so that your cash value increases a lot sooner.
Oh, because it depends on how much you pay in.
Yes, how much you pay in.
So are you getting what you pay in?
No, it's not that much. So if you get 19,000, it might take 10 years before it matures. It might take before mature. It might take the life of the policy. That's what happened. It matures and the life of the policy. But what
does that mean? It means whatever that you've paid in once, it catches up to the cash.
It catches up. Yes,
value,
it catches up.
That's called maturity.
Maturity. Yes,
and
maturity.
what does that mean? You can withdraw.
You can withdraw money, because now you.
So when people say my policy has matured, it means that
you can
use that.
You could use that money to borrow, but you have to pay it back.
Oh, you still pay it back.
You still pay it back.
That's your money.
Yeah, you still pay it back. So it's a loan. You take out a loan, but the thing is, the higher it is. So let's say you want to buy a house, because that's what people, the rich do. They have these $1 million policies that and it takes probably 5-10 years, and they got like $30,000-$40,000, $50,000 in 5 years inside their policy that they can borrow. And guess what happened? 5 years. If they need to use that money for the investment, guess what? They borrow $50,000, and they know they're gonna pay it back. Cause the beautiful thing about insurance,
the rich know what to do.
The beautiful thing about when you borrowing back, you're not borrowing. You're not. They taking it from your
cash value.
The cash value. So what happened when you paying whatever it is, $10 or $20 or whatever it is, your premium, you might be paying an extra $5. So if your premium is $15, you might be paying another $10, which is reasonable. That's
another way of saving.
It's another way for saving for an investment. And that's what you should use it for, an investment. Assets over liabilities. Think about that.
That's good. Okay, let's jump on to the benefits.
The benefits. Why life insurance
is important. One of the things is that, of course, it helps with future expenses, be it education for your children, but the one that's cash value. So we're not talking term. We're talking.
But no, it can help even term. It can help for expenses
when you're dead.
Yeah, when you pass away.
Because the money only comes out when you die.
Yeah, but that's why we're talking about life insurance.
Term.
Yeah, within term.
We have to specify that because people will be expecting to go into a term.
What happens is
right now more companies are selling term than their whole
life. Now here's the thing: if you get term, like the benefit, we know why they do term, and what they try to advise you. If you have a term, especially if you're 30 years old, and you probably live longer than the term. So what happened was because the premium is so low, it gives you opportunity to invest and to save somewhere else. So you want to do compound interest. So if your premium is like $80 for 2 us, it's like $80 or whatever. Guess what? You can use whatever was costed for our age. If our age and we got over $100,000, if the premium for our age is maybe $150, we invest the difference. And that's how they do it. They get the term and they invest the difference into the market, the stock market.
All right, I'm a bit lost, but okay.
But they invest the difference. If your premium for whole life is $150 and the term is $80, the difference from
now I get you.
The difference is $70,000.
Right.
So what you do is you invest the $70,000 into the stock market.
When you drawn it, or
no, from your pay. Every
so
month.
When you die?
No, every month. So that because term insurance is only for a length of time.
Yes.
And you might outlive before the term is out. So what you do is you invest the difference when you can. So that when the term is out and you don't have to worry about it, then guess what happened? After that 30 years, if you're investing into the stock market.
Do we have all this in place?
Huh?
Do we have all this in place?
I am investing into the stock market.
So it's a yes or no?
Yes. Okay. I'm investing into the stock market.
Just checking.
Yes.
Because we don't want to be telling you when we don't have.
I have mutual funds. Yes, we have mutual funds. We invest in the stock market. Yes.
Okay.
See, because if we keep that for 30 years, it will be a compound interest and longevity. You would have more than $100,000 in the stock market if you start now and 30 years from now, you have way more than $100,000 in the stock market.
I want that $1 billion that was just won by that lottery winner. I really do. Who's with me? $1.2 billion. Oh, Jesus. All my problems are gone. Anywho, let's go back. So it helps with the future. It just helps with even daily bills, just the upkeep of the family, because most people that probably die are breadwinners. You know what a breadwinner is?
Yeah.
Do you call it breadwinner in
Yes,
America?
we do.
You do?
Yes, we do.
Hi, boy. So it's breadwinner here.
Yeah.
What is breadwinner?
Breadwinner is when somebody wants either husband. One of them is make more than the other.
No, breadwinner is a person who brings in
the bacon.
Yeah.
Yeah, it's the same thing.
It can be anybody. It's not like one is making high or not.
Yeah, but
somebody who's just buying food and paying the bills.
Okay,
that's a breadwinner.
but still, yes, he's doing everything. But the breadwinner, he or she is doing everything, or they make more. A lot of times, they're the one that's working, and the other one not.
I think they have a wrong definition of breadwinner.
It's the same thing.
He's got the wrong definition. Breadwinner is just solely somebody who's just supporting the family.
It's supporting the family, yes.
Whether they bring in $5 or $20, it doesn't matter.
If you want to say it like that. Okay, somebody that's supporting the family.
Okay, the second point is?
Yes, it covers funeral expenses. Yeah. And that's why we talk about the GoFundMe.
Yeah.
When you got life insurance, it leaves a peace of mind for the family.
Yeah.
You don't have to worry about
you find most people, oh my God, they cry
Stop with
so
this
hard.
GoFundMe.
They cry so hard when somebody dies. Not because they will miss the person that died.
Because they got to pay for all this.
They're just thinking, how
oh my God.
will we bury this person?
And another thing too, when you don't have life insurance, sometimes, and that's why you see some families that had to wait 2 weeks to bury them. Months. They had to wait a month to bury a person. So they still collecting money. But
and your dumb body I wanted to say the other word, but I just say dumb body is lying in the morgue because you don't want to pay.
You don't want to pay your premium. You rather eat out every day than to spend that $20
or buy Jordans and show off with girls. Why?
Yes, that's what we talking about. We were talking about in the first series, having an abundant mindset, because a lot of when we buying Jordans or junk food over life insurance, yeah, we got a scarcity mindset. When we rather buy anything that's a liability.
We'll live forever. We won't live forever. Death will come, and when it comes, don't frustrate the ones who are.
Yes, don't frustrate. See, because what happened is when you got life insurance, when you die, they get the money right away within 5 days, 7 days, 24 hours. They have the money and they can bury you within 3 days, whatever. You can be buried within 3 days if you have everything planned out. Like my mama have everything planned out. So the funeral arrangement will be so quick because she know what casket she want. She already told us.
Really?
Yeah, she told us what casket she want. She know everything. She know what she wants in the church.
She also doesn't want all the glitz and glam because Americans are going big on funerals now.
Oh, that's something fun.
They're using horses and we're gonna
bring down something funny. Yeah.
They're using horse carriages and I thought Africans go big. Americans.
If you got the money, but guess what happened when you got life insurance and this is what you want, you can do whatever you want to do.
But I still feel it's a waste of money.
I know it's a waste of money.
My mom wants the simplest funeral of all times. The simplest. She's like, even if you get me like a tomato casket, I'll be happy. The simpler the better. Because I want you guys to
enjoy the money.
Or do other stuff that will help you out. Yes. Why waste the money on something that will go underground and I'm gone?
A lot of times it's for show.
It is not a long time. It's
always for show. It's always for show. They want to make it.
I want them to see. And you never even loved your mom when she was alive. Or your parents. You never gave them any mind. You never took them out. You never honored them. But you want to show off on their death, on their funeral. Like, get a life.
Get a life.
We're not.
Michael Jackson?
No, we're not impressed. English was just running away from me. English, come back, English.
Yeah.
One, two. English, are you back? Good, we're back.
Yeah. But we talked about common funeral expenses. Ain't you tired of seeing the GoFundMes?
Yeah, it is exhausting.
So we wanna let you know that if you don't have insurance,
but then families have no choice but
it.
to ask for help when the person who died did not do the right thing, especially when they are when they're adults. They didn't do the right thing. But if it's a child, then we got the parents to blame. But it also depends on their economical situation as well.
But that's why you have to. We were talking about budgeting. You have to plan for these things. You gotta.
And sometimes things happen.
I know things happen, but you gotta.
I'm trying not to be judgmental because you don't know.
We're not being judgmental.
You are being. I'm not.
No, we're not. We're not. I'm not being judgmental. No. I realize.
He's judging you.
No, I'm not. I realize sometimes circumstances happen.
Yeah.
But this is when you gotta prioritize things.
Yeah.
You gotta look at your budget, and that's why we talk about having a budget and looking at what's more important. And then whatever on your
insurance is very important.
Yes, insurance. Whatever that's not on the list, and I can't do. You know what? You gotta start checking other things off. That's not important. It's like going out and buying Dunkin' Donuts. If I can't do it because I'm not gonna stop paying for my insurance. I'm not gonna stop doing certain things. I'm not gonna anymore. That I would never stop. And guess what? Because my mother did give me that whole life policy again, I have 2 policies on me. I have a whole life and I have a term. And I think the whole life is more. Like this time, I got more.
I need to check the beneficiary of the whole life because
I think my mother's the beneficiary.
Well, I'm in the picture now. Hello, mommy, bring it this side.
I think my mother's still the beneficiary. I never changed it. But here's the thing, because I think we agree, and you say just Because I was gonna change it, but you said keep it. Let your mother.
Yeah, why not?
Because I do have it.
For it. You know, so
I pay for it now.
She might as well. Well, she started it.
She started it, yes, but she didn't pay for it that long.
Let's make it her legacy.
Yes.
So the third point is that it can help your loved one pay off their debts as well, and even your debts.
Your debts,
you
yes.
know, and
that's the big one.
You're not a burden on the family when you're gone, because some people are still paying
mortgages.
No, well, yeah, mortgages, but
credit cards,
debts of people who are long gone.
Long gone.
Because some of them were married in communities of property, and it falls on the wife now, or on the husband, like your
or
spouse,
the children.
Well, if you're dead on it doesn't necessarily fall on the children.
Okay, but it does fall on the next person that's close to you.
Yeah.
So if the husband died before the wife, then it falls on the wife.
The spouse wise.
Yeah. But if you're the only one that's the last living and your wife is not living, or your husband not living no more, then it fall down to the children.
The children still bear the
yeah, somebody gonna pay them. Yeah.
But
it goes to the next
person. Big loans and stuff like that. They have an insurance where should you die, then it gets paid off.
No, they gotta pay. The only way it won't. The only way you don't have to worry about it. Let's say if they don't have no children. Then the aunts or the cousins not gonna pay for your debt.
Right.
They're like, oh, he passed away. But your children, it will go. It will fall down to your children.
It can affect them.
Yes, it can affect them. So this is why you wanna, you wanna have a life insurance so that
the companies can come and
they can come, liquidate and come after your children, whatever they have.
So have that money, so you're not a burden to your family.
Yes.
Basically.
Yeah, so you want to be able to pay down any debt that you have. And this is what life insurance is for, so that you have a peace of mind. But like I said, when we talk about budget and all that kind of stuff, hopefully you don't have that much debt when you pass away, so that the money will be left behind to do investments, smart things. Because like if you do what my mother did, the money that we get from her life insurance, it basically goes to us. To do whatever you want to do. Because she's already paid. Because she already paid for everything. She paid for everything. But
even catering?
No, I'm saying the little stuff, here and there, we have to pay for that, but that's not that much. But the big stuff, the one that's gonna run you money. And here's the thing: my mother paid for her plot. She got it done.
So are we advertising mom?
Yeah, we get advertising mom. My mother is a great one. I love my mama.
Yeah,
but the beautiful thing, right? Because she did it early, she paid for her plot. She don't have to pay for it no more.
Yeah.
Cause once you paid it up,
smart woman.
Yeah, once you paid it up, you don't have to pay no more. So you pay 10, 15 years for a plot or whatever, and you don't have to pay no more.
Yeah.
Cause a plot, especially now, plots is expensive.
Yeah.
Yeah, especially if you want to go on the
Did
wall.
she pay for your plots too?
No, only her and her husband. She paid for her and her husband. Especially, it depends if you want to go on. Because it's in America, I don't know about South Africa.
I'm good.
I don't know about South Africa. But they have 3 ways you to go. You either go underground, you either go on the wall, outside, or you either go inside the mausoleum.
The mausoleum, maybe it's
you
there.
You go inside the room, and then you go outside.
Maybe it's there, but I have not heard of it. I know underground. And because underground is getting filled up, they encouraging people to cremate now. And I heard that they were also thinking of implementing to have the casket stand up. I don't know how that far.
Maybe they build a wall like they did, like the outside. Times. Yeah, because right now outside you could be on a wall. They build like a long wall. And it's outside, and you could go on a wall, and so it's tall. Yeah, you're in the shelf. Yeah, you can close it. That's where my mother gonna be. And then you have inside, where you could be inside like a nice room and warm or whatever.
Dead. Who cares?
I know, but it's warm. People do it. So
it's
you can be inside. Yeah, it's a building, and they have heat inside for the winter time.
Heat.
Yeah.
They're dead.
I know, but they still have heat.
Anyways, Americans, yeah, okay. Maybe they have it in South Africa, but I've never heard of it. I know that we're still big on underground burial and also cremation.
Yes, okay.
But black people hardly cremate.
Yeah, black people hardly cremate.
They're scared of those bursting bones. Anyways, Another benefit is that it can replace lost income.
Lost income.
So just talk more on that.
Yeah, because you gotta remember when you marry and both people are working, or you both maybe have a business and you're doing things. Now you have two incomes, and so if one passes away, now you only have one income. When before you have both incomes from the spouse.
So now
and
you've
the
got
husband.
some extra disposable money.
Yes.
That you can use from that payout.
From that payout.
You don't take the money and go and blow it out.
Don't blow it, yeah.
Expensive cars.
No.
Rather pay off what you
assets
have.
over liabilities, and rather put money into an investment.
But I know what I'll do with the first payout. Oh, first flight to
South Africa.
No, vacation. What are you talking about?
Oh.
Vacation. Like,
And then the rest of you invested.
Be good. I was single. I'm kidding.
Yeah, because I got more on me than
you don't have to. I'm single, and I'm just kidding. I mean, I'll be heartbroken to lose my love.
Yes, but you want to, because it's hard when you just got one income, and so you'll be back to being single. You'll be back to one income, and so you want to cover that other income. So this is why you want to have life insurance, so that they have a peace of mind for a couple months or a year, and you'll be smart especially if you have 100,000. Yeah, if you're smart, you make sure you make your money work for you, so that 100, cause money, if you don't be smart with money, it will go. Even the person that won the $1 billion lottery, if they're not smart with it, $1 billion will go just like that if they don't know how to put into investment.
Because if it doesn't come in and it's just only
going out, yeah, eventually it will eventually run out. It might take a little longer to get to that $1 billion. It might take 5 years or 10 years, but if you keep spending, eventually it's gonna go out. So if you don't go, so with the 100, if you got 100,000, 500,000, $1 million, especially if you start when you were 20, you might be able to get $1 million and only pay $50. You know, but you got $1 million. Yo, you can do a lot of different things with that.
But I know that they don't allow that much amount of money.
Yes, you can in the U.S. Oh, it depends how much you make. They go by how much you make. You're right.
Always that comparison. Oh, in the U.S. we do it like this. Oh, this is America, baby.
But if you're making 50,000 or 40,000, you can probably get up to 500,000. Or 250,000.
Yeah, you get a reasonable amount.
Yeah, you can get a reasonable
But
amount.
it's always racial.
Yeah, but if you probably got to be making more than 100,000 to get $1 million. Yeah, they do ratio on your income. Yeah, that's so true.
So I was right. That's true. All right, but the last one is legacy building.
Legacy building.
Financially protect your
build
family.
legacy, leave an inheritance
Leave
leave an inheritance like the Bible said. Leave an inheritance to your children.
Don't just be a pauper. Leave something.
Leave something. Leave a legacy. Allow your family to have a good start, especially in the Black and brown communities. You know, a lot of times because our family was in slavery, we couldn't have a good start. We didn't have a good start, but by you doing the right things and getting life insurance, you can help the next generation with a good start to start building legacy. You know, and that's how, the Rothschilds and Rockefeller. How do you think they $1 billion company and $1 billion family? Why? Because they had these different things in place, life insurance, trust, and wills, and all these different things, to help their family so that they can still be here today. You still be talking about Rockefeller and Rothschild, generational wealth. And so we have the opportunity today to leave, to change a generation and put our family in the right track. Because like I said, you got 500,000.
Starts with us. Starts with you.
If you got 250,000, you can really do some good.
Would love the lottery.
You could do some great things with some investment, buying property, houses, or whatever. You could do a lot to change your family trajectory forever.
Amen to that.
Legacy building. That's all about legacy.
Let's be legacy builders. So we've come to the end.
Yes.
Hope you enjoyed that because it's more of an information sharing.
Yes.
And just an awareness that, let's not take life for granted.
Yes.
We are not here on this earth forever.
It's okay to talk about death.
We will die.
Yes.
Eventually. And some deaths is a surprise.
It's a surprise.
Let's not be surprised when the person has to be buried, because we want our loved ones to be buried
in a nice
in
place,
a
decent, dignified way.
Yeah.
Yeah.
And Africans, we go big or go home.
Yes.
Ooh. Funerals, shoo, child. Even the decorations are big.
Yeah.
But we'll talk about that on a Sunday. Maybe do comparisons, and you'll see how the Americans are actually catching up now. Because they used to be like very
because those that are better prepared, they can do them things, and that's why when you got life insurance, you got options.
Oh, Africans will borrow.
But you don't want to borrow because you got to pay that money back.
I know, but we still do. That's what it's for.
That's GoFundMe. Borrowing money is like
we're not borrowing from people. That's begging. GoFundMe is begging.
Okay.
I'm talking about
borrowing for family.
No.
What, they get loans?
Yeah,
but they got to pay. That's debt we were talking about.
Exactly, but nobody has money to go.
That's why we want to have life insurance. And you don't have to go into debt to make your family look.
Nobody has money to be going to fund in Africa. Anyways, this comes to the end of our show.
Yes.
We enjoyed that.
Oh, we enjoyed.
And we're just thankful to everybody that has subscribed.
Yes, get life insurance.
We really appreciate it. We really appreciate your support. We love you.
Yes, we love you.
And we hope that you share these videos as well with your friends and families and your enemies. Okay?
Okay.
Share it with your enemies too.
Yes, with everybody. It doesn't matter.
Yeah. And also, we'd like to be your friends on social media. So please follow me at Lady Caesar One on Instagram, and
you can follow me at Get Inspired by LJ on Instagram, YouTube, and Fanbase. As well as this podcast is sponsored by Nest Opportunity Window. It allows us to have these deep conversations, thought-provoking conversations, not just during the podcast episodes, but inside the community, where we can keep the conversations going, where the network with one another, share ideas, share thoughts, and share different opinions, where you really receive exclusive content from the daily themes that we have available unto you. You could join the monthly webinars as well as the quarterly masterminds, which be on Zoom, and the monthly webinar be inside the community. But yeah, we have challenges as well, but it allows us to connect with one another. If you struggling with staying on task and with being keeping a routine, join the community so that you can be held accountable with your other community members. And like I said, we do give you a 7-day free trial to try us out, to experience what we offer, and then if you like it, we say continue, join, stay in it, so that you continue to receive the content.
And I'm sure you like it.
Yes, and we're sure that you like it. And like I said, if you love it, you like it, you want to stay inside the community to continue to network with us, we say we charge you a small fee, a small investment of $9.99, so that you're able to continue your learning on a monthly basis. Yes, we thank you.
Yes,
and you can listen to the audio version of the podcast, and we just expanded our reach. Upgrade. Yes, we not just on. You just don't have to listen on
Siri. Play Chilling with the Chaplins.
Hey. You just don't have to listen to Apple Podcasts, Google Podcasts, Spotify, on Amazon Music, but we on FM radio. We on iHeartRadio. We on Twister. I think I'm saying it right. TuneIn, Alexis, and we on as many more.
I want to say Alexis. Play
Chilling with the Chaplins. It sounds nice, right? But yes, we on all the different, whatever platform that you listen to your podcast, you can check us out. You can follow us. You can hit that review, write a review about the podcast and how you like it, how you enjoy it, and give us a 5-star rating. I know on Apple Podcasts and Spotify, You can leave give us a rating and leave a review. So please follow
Be
us.
excited
Thank you for your
as
support.
we are. See
We
how
thank
excited
you.
it is?
Yes, we thank you for your support. Because your support, it does help us to reach more people
And to grow the
and
channel.
to grow the channel. So we thank you for helping us to grow the channel
Yeah.
and to reach more people.
Do subscribe. We love you.
Yes.
And we'll see you.
We'll see you next week. Take
Bye-bye.
care. Bye-bye. Yo, it's your boy, LJ Chaplin, with Lady Caesar, bringing to you Chilling with the Chaplins, where we deep dive, giving you practical concepts in ministry, business, relationship, and personal development. So we can take control of our life. Let's go and let's get it started.